What's up, everybody? It is Joe Soto, your favorite loan guy, and today we're going to talk predictions. We're going to give you our 2025 market forecasts and predictions. Before we do that, we're also going to look at 2024 and see all of the crazy things that happened there. And so we're going to focus on a couple of things. We're going to focus on interest rates and where that's been and where that's going. We're going to focus on housing, where that's been and where that's going. And then we're going to talk about the economy, our overall predictions, effect of the election, all the things that are going to give us 2025 and the stuff that's going to happen. Okay, first up, we're going to talk about interest rates. So 2024 was the first year we saw an interest rate cut in the last 4 years. It's been a while and we were waiting for it. And what we saw was the Fed cut rates back in September, right? They cut rates 0.5% on the federal funds rate. And everybody was super happy because they were thinking this means interest rates are coming down. The reality was interest rates actually went up after that rate cut. And why did that happen? Because the few weeks before that, we were seeing good economic data that was bringing interest rates down. So overall, interest rates came down before the actual Fed rate cut. So what's the prediction for next year? The Fed is predicting to cut another 1% in 2025, another 0.5% in 2026, and then maybe total cuts in 2027 of 2%. And what does that really mean? Does that mean rates are going to come down 2%? Does that mean that we're going to see a 3% interest rate? Probably not. But overall, it does mean that the Fed feels that the economy is in a position that they have to stimulate the economy, right? So think of the two sides of the pendulum, right? We had one side where the Fed was raising rates to slow the economy. Now as the economy is slowing down, they will now drop the rates to try to stimulate the economy. And that's the game the Fed is playing. Thankfully, we've made it out of the rough couple of years where it was up, up, up. And now we should see things moving in the right direction and interest rates coming down in the future. So where are rates going and what are the experts predicting? So a lot of the experts are predicting rates to come down to the mid-5. That's what we're forecasting for next year. So what are the experts predicting for interest rates moving forward? So many experts are predicting rates to land somewhere in the low to mid-5s, right? We've seen rates come down from 7.5 down to low 6s pretty quickly here in 2024. They're projecting from the low to mid-6s down to the mid-5s in 2025. So that would be good for people who bought homes in the past and wanted to refi, or people who are looking to get in the market and making homes more affordable. But you got to keep in mind that rates don't just move in one direction. So you're going to have those moments where rates drop and then they creep up and then they drop and then they creep up. So it's impossible to time the market. I wish I could, right? I would have timed the market if I could do it for my own deal, and I can't, right? But we all know that we're trending hopefully in the right direction and rates should continue to move downward here in 2025. A big question that we're getting is, when is a good time to refinance? What should I do, Joe? Is it now? Is it later? And I'll give you the cliff note. Really, what it comes down to is cost versus savings. So if it's costing you a lot of money to refinance and you're saving, very little, it doesn't make financial sense because rates are in a downward motion. So the key is to refinance when your cost is low and your savings is high, because that will make your break-even point pretty low. For example, if your closing costs are $3,000 and you're saving $300 a month, cool. It takes 10 months to break even. Versus if your closing costs were $20,000 and you're saving $200 a month, it's a 100-month break even. You'll never win on that deal. Only the bank wins on that deal. So if you're sitting at a rate in the 7s, even mid to high 7s or low 7s, you could probably benefit by getting into a low 6% rate. If you're sitting in the 6s and the mid 6s, you probably want to get down into the mid 5s. It all depends, but it's one of those things that it's case by case, and it really comes down to cost versus savings and making that break-even point as low as possible, because most people are forecasting that rates are going to come down and you won't win on that deal. Only the bank will win on that deal. Next, we're going to talk about house prices. And this is a really interesting topic because it varies from neighborhood to neighborhood, community to community. I mean, I laugh. I'm in Southern California. I laugh when I see the national median home price nationally is like $300,000, where in my area, the median home price is almost $1 million, right? So it just varies from area to area. But again, if you look at the national statistics, over the last 12 months, we've seen an increase of 3.2%. Now that was with interest rates in the 7s, mid to high 7s. What do you think is going to happen when these rates come down to the mid 5s? Do you think prices are going to go down or going to go up? Do you think there's going to be more buyers or less buyers? So I think as the interest rates come down, more buyers are going to come to the market, which is going to bring prices up. And another reason we saw those housing prices go up was because of the low supply of homes, right? People who were sitting on 3 and 4% interest rates, they had no motivation to sell because if they sold, they were going to get a 7%, 7.5%, 8% interest rate. So inventory was at an all-time low in almost every market throughout the country. So when inventory is low, right, there's not as many homes for sale, those buyers were still out there at 7, 7.5%. And that's why the housing prices continued to come up. So it'll be real interesting to see as these interest rates come down, if more people sell their homes and more buyers come, maybe that doesn't lead to a 10% gain in prices. Maybe it's another 3, 4, 5. But if it gets low, if interest rates go down and there's not a lot of sellers, and you've got 20 offers on every house the way we had way back during the pandemic, that could push prices really, really high. So overall in housing, people are always going to need a place to live, right? It's just human nature. We all need food and shelter. And so I think as the market moves and we go into 2025, I'm thinking interest rates should come down, and that should bring more buyers to the market, which ultimately is either A, going to put pressure on prices and move them up, or hopefully it brings more sellers to the market and balances out the market, right? That is really the key point that we're gonna wait and see. And again, it varies from area to area, city to city, county to county, because some areas have really good inventory right now and some areas have none. I think that's gonna be critical as we move forward into next year, but hopefully low rates brings more sellers and maybe more buyers in 2025. As we roll into 2025, really the biggest housing question that we're getting is about the election, which is really in 2024, but everybody seems to think that this election is gonna have this profound effect on housing, whether good or bad. Everybody's picking their side the same way they're picking their candidate. So let's take a look at the facts. Home sales have actually gone up. Here's a couple of shocking statistics. 9 out of the 11 last presidential elections, home prices have gone up and not down. That's pretty interesting for those of you out there who are saying prices are going to crash after the election. The only time, 2 times that they went down were actually back in the 80s when we had a massive correction. Another great example is 7 of the last elections. After the last 7 of 8, home prices did the same thing. They also went up. The only time we saw a decrease or a decline in home prices was in 2008 during the Great Recession, where everything went down, not just home prices. So election aside, we're really going to see one of 3 things happen after the election. We're either going to see a recession, we're either going to see hyperinflation, or we're going to see a soft landing. Ultimately, do we know which is going to happen? No, we have no idea. But which one benefits both parties? And that's the soft landing. And I think both parties can agree that we can't have a real estate crash, because ultimately we're in this weird market with all of these things going on in all these other countries, right? Israel, and we have the Ukraine, and we have all of these things going on, that ultimately a soft landing is what most people want, regardless if you're Republican or if you're a Democrat. So what is a soft landing? What does that mean? That means that interest rates come down slowly. They don't jump down. We're not going to see 2, 3% interest rates, because that's going to shoot home prices up, right? Soft landing, probably somewhere in the low to mid 5s with regards to interest rates. That soft landing should lead to more buyers coming into the market, hopefully lead to more sellers coming into the market, right? That would be ideal, because nobody wants home prices to continue to go crazy and go up. So most people are predicting a soft landing with regards to interest rates and housing. I think regardless of who wins in the election, both parties are going to want that for the just global economy. And that's basically what we are predicting for 2025. At the end of the day, you get into the home, you buy it, you own it, you're going to refinance it in the future. We don't think prices are going to be going down, but we do see interest rates going down. And if you found this video helpful, be sure to subscribe, share, tell a friend, do all of that fun stuff. Bye.